Welcome to the Options Trader Lounge, where we talk about generating income and growing your wealth within the US stock market using options. Thank you all for tuning in. We have a good one for you tonight, so get yourself a drink, sit back, and relax because we have a lot to talk about. Now, in today's video, we're going to be discussing the market movement on Monday's market session on what took place this first trading day of the week, which is June 12, 2023. Now, we are currently watching the major indices, which would be SPY, QQQs, DIA, IWM, and the VIX. Now, the market leader for this trading session was ultimately the QQQs, which is the tech-heavy sector. Now, many of the traders were actually watching how the Friday close was, and we saw that Friday was ultimately drawing in a lot of fear because this is ultimately a reversal candle. However, reversal candles aren't confirmed until we get the following candle to confirm it. Now, if this were to be a confirmed bearish signal, we would ultimately see Monday's session to close a lot lower, and we didn't get that action. Instead, we got quite the opposite. So Monday being a positive trading day, returning a positive return of 1.69%, ultimately negates Friday's signal to be bearish. So we got a positive return across all major indices of the market, and there's a lot of reasons for that. Many of the reasons are attributed to the upcoming major economic data that are coming out this week, and we are going to take a look at that. So what we have here is tomorrow's trading session will include the core CPI or core inflation rate reading, and many people are expecting to be a decrease, which would be positive for the market. People are already seeing that inflation is starting to trickle down, and this could be a cause of deflation. However, this is positive for the market. And in addition, Wednesday, June 14, we have the Fed interest rate, which many analysts are expecting this to be a pause in the interest rate increases, which is ultimately positive for the market. Now, these are the two major economic data that are going to be coming out this week, and it's something to pay attention to. However, we don't ultimately know how the market will react to this. It could be both positive or negative for the market, and even though we have positive reading, the market may react negatively. So the the goal of all traders and what we should all be focusing on is how the market reacts, because our goal is not to predict, but our goal here is to react well, react with understanding our risk, knowing where our stop losses are, and knowing how to take advantages whenever risk reward is more favorable for us to take a trade. So how do we determine what would be a good risk reward setup? Well, the key is to zoom out and understand where your price levels are. So what we can see here, let's see here. What we can see here are the major pivotal moments within the market. We can see that this level here and this level here acts as a form of resistance, and the market can trend up to this level here if we continue to get more positive reaction in terms of price within the markets. Now, if the market were to turn down, we have areas of support which would be favorable to basically buy low, sell high, which would be at the 450 level. 350 level on the QQQs. Now, the price movement of SPY and the QQQs are very similar, so the key is to really just understand where your levels are. We can see here that the 459 level on the SPY could act as a form of resistance. The market could ultimately trade up to this level here and move higher if the market reacts positively. However, if the market decides to take a dip, we have areas of support which would be a good area to place a risk reward setup to trade upwards for a trend higher. So that is where I'm looking at different levels within the market. The key is to understand and be patient to execute trades if you're planning to go heavy, it's always better to pick the far end extremes of a move and to trade higher. um, if you're going if you're going long, buy low, sell high. If you're trying to sell short, find areas where it would act as resistance to eventually find a reversal to bring the market back down. Now, with the VIX is very interesting today. The market definitely went higher on the VIX in terms of price. If we zoom into the daily candle, the past couple of days has been moving down and lower with the VIX trending lower basically means that the market moves higher. However, the market did move higher today and the VIX went up. So this is a negative correlation because it's supposed to go in opposite directions. If you're trying to if you expect the market to move higher, typically the VIX moves lower. But today we got both indices moving higher, which can cause a little bit of concern because we are expecting a lot of volatility within the next 2 days with the major economic data to come out. Now, this is an opportunity to find levels in the market because we can find a lot of premiums if you're selling options. Now, this is an opportunity where you can definitely load up on selling options. However, you definitely want to continue and consider levels on the S&P 500, the QQQs, and the Dow Jones, and really understand how these different indicators are reacting in terms of price. So that is what I have for you today. The main thing to watch out for this week is ultimately going to be the CPI, which is on Tuesday, and the Fed interest rate on Wednesday, and really to monitor how the VIX is reacting because we are seeing the VIX to finally find a bottom after its continuous consecutive days of selling off. But we're finally finding a pivotal point where the VIX went higher. So this is something to keep your eyes on and to continue to monitor. So that is what I have for you today. I hope you enjoyed this video. Thank you again for watching, and we'll see you on the next one. Make sure you hit the subscribe button and hit the like button so that we get notified on our next videos. Peace.